Welcome to the Money Mindset Mastery Podcast. Today, we have Jay Bhutani, President and COO of Raintree Wealth Management, discussing their investment philosophy and risk management approach. Jay emphasizes the importance of a diversified portfolio and a steady, conservative investment strategy. He also highlights the challenges of selling mutual funds and the evolution of the financial services industry. Raintree Wealth Management provides tailored investment plans and excellent service. They adjust investments based on the market and ensure clear communication with clients. Enjoy the following episode.
To the show, we're glad you're here. Jim and Ryan, host spreading cheer. Woohoo! Come on in, take a seat, let's dive deep. Where finance and psychology meet. Are you ready? Money Mindset Mastery, it's time to explore. Let's go. Unlocking secrets,
That's another
open.
funky song that we just introduced as well. I like that one.
I like that.
Appropriate for Jay visiting us today.
Yeah, it's like special tunes for me. That's amazing.
Oh, and Jay, before we introduce you, AI technology created all that for us, so it's wonderful.
Oh, okay, it's awesome. That's great.
Well, I'd like to welcome everyone who's watching and listening to the Money Mindset Mastery podcast. I'm your host, Jim, and joining me today, as always, my partner in crime, Ryan. How are you today?
It looks like beautiful weather, and we figured we might as well talk with Jay today on a beautiful stretch of weather. So,
yeah, I'm really excited to have Jay. Today is guest day, and Jay is our guest today. So Jay is President and COO of Raintree Wealth Management. Jay, thank you very much for joining us today. How are you?
Thank you. Thank you. Thank you very much for having me join your podcast. I've listened from afar, and now I get to be on this. It's absolutely great. How are you guys doing today?
Well, I'm excited because Jay, I think you and I have been working together since you joined Raintree Wealth Management. So it's been almost 2 years now.
It's just over 2 years. Yeah.
Yeah, and every time I get an opportunity to sit down with you on a personal level, I find out a little bit more about you. And in my world, you're starting to become the most interesting man in the world. So I don't know if a lot of that's...
I'll take that. I'll take that, or you need a bigger group of friends.
No, I mean, that'll be a separate episode, but you share some interesting things about yourself. And so I'm the more I get to know you, the more I appreciate who you are as a person. But today we're talking about you as, again, the President and CEO of Raintree Wealth Management. And we're not going to quite get into this is your life. We're going to talk more about your journey in the financial services industry. And
sure,
you and I actually have some similarities in terms of we're both born the same year. Mm-hmm. We both started in the financial services industry as bank tellers.
That's right.
I believe we also started for the same bank. We don't have to name them.
No.
And then at some point, our paths kind of changed where you took one path and I took another. And after about 30 years, we're kind of working together, in the industry as well. So we're going to talk a little bit about Raintree Wealth Management, or a lot about Raintree Wealth Management, who they are. A lot of people probably don't know, about Raintree Wealth Management. So we definitely want to get the word out because
sure,
you've come in and made some fantastic changes, and I think people need to be aware of that. And really, we're going to talk a bit about Raintree's approach, your vision for Raintree Wealth Management moving forward. And I think some people are hoping to get some kind of insights into what's happening in the market. And Ryan, you always say we don't have that crystal ball from Amazon just quite yet.
So still on order, back order.
Yeah, it's still on order. Gotcha.
Still on back order.
Keep it on back order.
Yeah, absolutely. So, Jay, again, Raintree Wealth Management, why don't you tell us a little bit about Raintree Wealth Management, and then you can talk a little bit about how you started in the financial services industry and your journey that led you to Raintree Wealth Management.
Thank you. Thanks, Jim. Thanks, Jim and Ryan, for inviting me on, like I said. So what Raintree Wealth Management is we are a global portfolio manager offering discretionary services to high net worth clients, foundations, and institutions. We take a very much a global approach of investing for clients. We find that most Canadians are over-indexed to Canada. They buy and shop in Canada, they live in Canada, they have homes in Canada. So we take a much more global approach to money management for them. And over the last few years, you mentioned since I've joined, we really leaned into more of a pension style investing philosophy for our client. One of the things that my track record, and we'll get a little bit into that, but I've been in the industry for about 30 years, as you mentioned. And the focus always has been about a bond and equity portfolio. And for the most part, most clients that satisfied them for the most part. The reality is as markets are becoming more hectic, more emotional, what we found is there's just a lack of diversification. So, we very much leaned into taking on more of alternatives focus. Raintree Wealth Management was born out of an exempt market dealer called Raintree Financial Services, and where we're really focused and specialized in private opportunities, private equity kind of opportunities. So we wanted to lean into that and have that as a part of our focus in portfolio development for our clients. And so, what we want to do is be able to offer our clients a really well diversified portfolio managing risk. I think that's a really key part of our philosophy is really managing the risk of portfolios. Of course, we want to be able to provide great growth returns, but if you don't do a great job of managing the risk, all of that can go to kind of pot, so to speak, in a bad year, and we want to make sure we manage that. So that's really our focus is that, and leaning into that pension style is what has served us and served our clients very well over the last few years. In terms of my background, so yeah, as you could probably, so those of you who are watching on video, first of all, apologize. You can see my gray. It's not my first rodeo. So I have been with Raintree about 2.5 years, but did actually, as Jim mentioned, started off as in the traditional kind of banking network, and actually was an advisor in that network as well. And then I pivoted in early 2000 to the investment industry, and I primarily worked for two firms. A firm that doesn't exist anymore called Altamira Investments, which was a direct-to-consumer investment firm here based out of Toronto. I think at its peak around $7.5–8 billion in assets. And what I took from that was I was able to learn the plumbing. I had a great mentor who brought me under their wing, Francis DeAndre, and giving you a shout out. Francis brought me under his wing and just kind of gave me the opportunity to learn the plumbing of the investment business, not just kind of the investment part, but like all the parts that most clients don't see in terms of running a wealth management business. And then I pivoted and moved over to a firm called AGF Investments, which is still a strong and standing firm I'm very proud I've worked at. I was there for about 10 years. I had various roles, started off in international, responsible for their international business, so selling to institutional clients abroad, primarily China, India, Japan, Singapore. That was my first mandate. And then took over the product group. So I was responsible for all the retail distribution. Eventually became a executive of the firm and took over the entire product team and all the products offering both retail and institutional across the globe. So there's about $50 billion under my responsibility there. And then over my later years, I did also help them manage their marketing group and then launched their ETF business. And then I took a little bit of a holiday for a few years to manage, kind of go into consulting. And what I found wasn't as satisfying in the consulting industry as, not only do you want to be able to offer your advice, but you want to hopefully have people follow your advice. And I found in consulting, that's not always the case. So I found that frustrating and wanted to get back into kind of being kind of boots on the ground and in real business. And then I, was able to meet up with Peter Kincaid, our CEO, a few years back, and we really started talking about the investment philosophy. And for me, that was a great matchup where can we provide Canadians a unique investment perspective that they aren't normally get. Most Canadians are shoveled to the banks to get their investment advice there. And could we provide a better opportunity for clients to have much better investment strategies and investment opportunities at their disposal for their wealth and success? So that's how I joined Raintree Wealth Management all those couple of years ago.
And from a disclosure point of view, so for people who don't know, I'm president of TVH Financial, and Ryan works with me as an associate advisor. TVH Financial, part of TVH Group, has a referral arrangement with TVH Wealth. that's led by portfolio manager Denis Bazan, who has the exclusive agreement with Raintree Wealth Management to offer
That's right.
Raintree Wealth Management investments and portfolios. So just wanted people to be aware of that. Let's go back a little bit further, the teller
Sure.
days, because I know when I became a teller, that was a hard job to find because most of my friends at the time were
Yeah.
working at McDonald's and Burger King and whatever else. And to get a job as a teller, I was 16. I think you were around the same age as well.
That's
To
right.
make the kind of coin we were making back then, it was
Yeah.
huge. How did you end up with a job as a teller at the bank?
I got super lucky. It's a great question. You know, everyone asks me, and it was just sheer luck. So I was hung out with a group of friends back in high school, and one of my friends, their father opened up one of the first Subway sandwiches in Toronto, Canada,
I love Subway.
and yeah, I don't know, and they happened to have that location right next to a branch.
Hmm.
So they became a very good client, as you can imagine. It's one of the first Subways. They were doing very well, and their son was looking for a job. So he came in and says, "You know, I'm a pretty good client. You know, this is when this used to work." And he said, "Yeah, my son's, looking for a job." And sure enough, brought him in and interviewed him, and he got the job as a teller. And then he was there for about a year, and then he got promoted to the side counter, and they needed someone to replace him. And they're like, "Do you know anybody?" And he's like, "Yeah, I got a friend," and that's how I got the role. And you're right. Being a teller back then was far more transactional than it maybe is today. Today, the transaction is taken away. It's much more client interaction. But back then, it was much more X's and O's, making sure people gave you the correct amount of money and you gave them back the correct amount of change, and vice versa. I fully admit I wasn't very good at that part of my job, but actually I was really bad at it. But what I was really good at was talking to the client. I was really good at, oh, I see that you have an account. You don't have a credit card. Oh, I see that you got a checking account, but why don't you have a savings account? You know, so I was good at that. And then they realized, well, I had the gift of gab, and I was not good with the money. So I was probably the only teller in human history that got promoted because they were bad with the money. Because they're like, you know what, just don't touch the cash. Why don't you go to the side and talk to clients? So that's how my rapid ascent into at the banking. So I was within 6 months I was promoted, just to shelter the bank from financial losses of me handling the cash. They just thought that was a better trade for them. So that's how I started, and then I worked my way through that. And I was originally intending to go to law school. So the bank was originally just uh, ends to a mean to go to law school, because Ryan, you can agree, like the world needs more lawyers, right?
Yeah.
Uh, yeah, and so I was going to go to law school, and I was like, oh, I need a few bucks to save, so that's how I started, and I started in the bank, and then it was just kind of saving up some money, and then I was 23, 24, so finished university, saving up to go to law school, and some district manager comes up to me and says, how'd you like to be a branch manager? And I was like looking around going, is it me? And like the teller staff was 15 years older than me, and again, I was just generally the only reason I was promoted even within the bank because I had a mutual fund license, a Canadian securities course, so I was able to sell mutual funds, which was in the early 90s. Not very many people at the branch network could do that. And then they offered me a branch. And so all of a sudden, little me at 24 years became one of the youngest branch managers in a uptown west end branch. I won't name the bank. I still bank with them. But yeah, they gave me a branch, and that's how I started. And then within a year, I got a second branch. And I was like, oh, okay. You know what? This was doing, and I was still living at home, by the way. So I
Wow.
was, making full-time branch manager, living at home, and I'm like, well, what do I need to go to law school? I think the economics are upside down on this, so that's where I decided to, like, you know what, I'll just stick to banking. Let's see where this takes me. I always had my law school in my back of my mind, and just never got to it. Maybe I will. Maybe in my second career, maybe I'll get to law school then.
Type of law do you want to practice?
I was a bit corporate law. So admittedly, I wanted to go to. There was only one school on my list, and the University of Santa Clara. Shout out to Santa Clara. And the only reason I wanted to go to that school because Steve Nash, my beloved Canadian, Hall of Famer,
The-
went to that school, and I was like, and it was a beautiful campus, and well-regarded law school, and I was like, that's the only school I want to go to. The problem was,
and it's in
being a
Santa Cruz.
non-resident to a California school,
Yeah,
it might cost a few dollars. So that's why I started working the bank to save up for that.
Oh,
I think
that's amazing.
I think
Yeah.
I easily would have went to Hawaii too, or California for schooling,
Yeah,
but
yeah. And then
stayed in
until you see the
Canada.
bill for going to school there, then you're like, oh, okay, there's a cost.
Yeah,
Back in the 90s when you're living at home and you're like, when you see, several zeros in terms of what it costs you to pay for tuition, you're like, okay, I maybe need to reevaluate this a little bit.
yeah. I should have tried a little harder in sports to get a
Yeah,
scholarship
exactly.
to one of those.
Yeah, no,
So instead of these half
no, sports
scholarships.
were not in my future, so definitely it wasn't going to go that route. Right?
So, Jim, a question for you, and again, we're not going to name institutions here
No.
because I was in a similar situation where I had a mutual fund license, worked for, at the time, I actually moved to a trust company. So, tell me if you were trained the same way as I was in selling mutual funds. My training was client comes in with a bunch of money in their bank account. You talk to them about mutual funds, and you look at the 10-year return, and you point to the highest average return, and that's the one you sell them. Is that how you sold mutual funds when you were working at
So
the bank? Is that your training?
so that was, yes, that was generally the training, which was, they
Yeah.
wanted us to. I remember we kind of had a roster of mutual funds. They wanted us to stay away from generally all the equity ones, like the specific, emerging market, Europe. They kind of wanted us to stay with that because that required way more. So, so they wanted us to your point, just kind of sell like a broad equity or broad bond fund. But I had the opposite struggles. So the branch that I first started off when all of those clients were GIC buyers. So the only thing they ever knew was guaranteed returns. So now getting them to invest, and a lot of them were European descent, Asian descent. So again, there's not a trust factor to just throw money at the market, quote unquote, the market, to get better returns. So I had a very challenging time. So my first year, the only thing I could sell was money market because
Really?
no one trusted to put their money in the market. The mutual funds, especially the bank, back in those days, you probably know, it's like clients were really kind of hesitant to it. So I had a much more challenging time. When I moved to a branch kind of downtown Toronto, then it became a very different scenario. Then it was like, yes, send me your Asia fund, send me your Japan fund, like yeah. But when I first started off, yeah, I think all I ever sold was maybe like it was probably 80% money market and like 20% some very conservative balanced fund. But I couldn't get anyone to buy anything else because people just didn't want to take on market risk back then. Now obviously more and more clients are sophisticated and we've done a better job globally educating Canadians on how to improve their money management. But back then it was like, oh, I don't care what the GIC rate is. That's all I'm taking, and that was it. Yeah.
Oh, yeah. I mean, I know we transitioned from, like you said, a transactional or service model to a sales model, but we weren't trained very well on the sales side of things. And I look back to how we were trained, and I cringe, and that's why I'm glad the industry has improved a lot, and there's a lot more protection now, and there's a different way of educating clients, and there's a lot better firms out there, investment firms now that do a much better job for clients, and Raintree Wealth Management is one of those firms.
Yeah.
So let's talk a little bit about Raintree's investment philosophy. What
Sure.
would that be?
So our philosophy is kind of built on kind of three pillars. So the first is our kind of a conviction to be different, and that sounds like everyone says that, but to dive into that, what that means is a lot of portfolios, and we talked about it, Jim, solutions that are offered to clients tend to be very rigid, like they're X percentage stocks, X percentage bonds, and there's very little wiggle room around that. Um, and we find that doesn't serve the client. That serves the fund, but it doesn't serve the client because what happens if the market's got a great growth opportunity and that fund is not taking advantage of it? Or if you see risks, so you saw the pandemic, we just saw that. And if your fund is locked into a 60% equity, 40% bond, and a pandemic happens, and your fund can't do anything to get out of the way, well, that's not going to do the client any good. So for us, we're not kind of focused about, like, let's call it benchmark hugging. I'm not going to name names, but there are firms out there who just want to make sure that they're staying in kind of that pathway. We want to be able to get out of the way of risk when we see it, and we want to be able to take advantage of opportunities. We're not whipsawing the accounts. We don't have a huge turnover ratio, but we want to be able to make much more significant moves than 1 or 2% that certain funds can do. So that's the first. Second, as I mentioned earlier, global investing is at the forefront of what we want to think. Canada, as great a country it is, only represents about 3% of global GDP. So it's a big world out there. I always like to say Canada is an amazing country, but it's at the end of the day, from an economic standpoint, it's the stuff we can pull out of the ground and banks. Like that's what Canada is. So there's a lot of sectors that we don't cover here. So we want to make sure we have those as well. And then lastly, valuation. So valuation is a simple way of saying it is if all things being equal. So if I'm looking at two apples, an apple in New York and an apple in Beijing, if those apples are exactly the same and they provide the same risk return profile, I'm generally going to, our focus from our investment community is going to focus on buying the cheaper apple, if all else is being equal. If there's different risk return parameters, then not, but we'll generally we'll gravitate towards markets that are a bit undervalued. That's not to say we're a deep value manager, but that's generally where our philosophy rides. What that helps a client is it really just protects them of overpaying for hot markets. We're seeing that right now in the US, not all of it, but we're seeing it kind of in the tech sector. So you want to be able to protect yourself against not just necessarily buying the hot commodities or the hot tech stocks and then clients getting burned for that concentration. So we want to be a little more thoughtful about that. And then that really also goes to our design. So a lot of, I've been in the industry, as I mentioned, for 30 years. And a lot of that time I spent building funds and products for clients. And generally speaking, most firms' desire is to build a fund that will outperform something, outperform a stock market, a bond market, or some sort of collective amalgam of that. What we're trying to do is first, but the downside of going back to that. So by observing, by going after performance, what you're giving up is what risk will do to you, or observing risk per se. It's like, think of it, if you're a high jumper and you're going to keep trying to jump higher and higher and higher over that bar, at some point you could fall and it's going to hurt, but you don't know until you jump that high. And so we don't want to take that risk for our clients because that fall could be devastating. That could wipe out years and years of returns. I saw it. You saw it. We were both around during the financial crisis. We were both around during the tech wreck. So it took some clients 10 years to get back to square. So that's what we want to avoid. So for us, we want to observe risk. We want to understand the volatility of the markets we're investing in. We want to understand the volatility that the client's willing to actually stomach. Because that we take that into consideration, and those factors will lead us down a decision path of investing for them. So if we see a very risky market, we'll become very conservative relative to the market. If we see a really growth market, we'll take advantage of that. But I think having that focus on risk and risk management is going to help protect clients in the long run. If you don't put a client in a big hole from an investment perspective, two things happen. You could, the markets are fickle. They don't go in a straight line. You could have negative years. How well can you mitigate those years where the markets aren't working with you, so that two things. The next year, you don't have to then dig yourself so far of a hole. So if you're only down 3, 4, 5%, you can have normalized returns and make that back. If you're down 15, 20, 25, now that's really hard to get back in a year, 2 years. So now you're just giving up time to make that back. And secondly, I've seen it and again, we're not going to name companies, but I've seen it before where if a manager puts themselves in a hole, what they generally do is they start to double down on their bets a little bit. So they then begin to take on a little bit excess risk in following periods to make up for the loss or justify their positioning. And then I've seen that snowball on them. So we don't want that scenario. If we can do a great job protecting clients in a good year, do a really good job of managing their upside, we're just going to manage that volatility. We'll just provide a safer and steadier ride to retirement for clients.
Yeah, I think
I talk a lot about. Oh, sorry. Go ahead, Ren.
It's probably going to be the same. We talk about sequence of returns. We talk about managing risk a lot with clients, and in the short period of time working with you, Jay, it's one of the things I've noticed. The peace of mind a lot of clients are seeing because they're not taking that roller coaster, right? And when clients come in and they're meeting you or they're meeting Denis, it's, well, what's the return I'm going to get? Where's my 25%, right? Yet they're not willing to talk about, oh, I took a 35% dive on these years. And I think that's one of the biggest differences in talking with you and talking with Raintree that I've noticed in my time within this industry is we're talking about this slow and steady wins the race. Let's take a lot of the stress and the ups and downs out. Instead, just take a nice little ride up, because we can walk into the banks and see the big, beautiful charts, which I love looking at how the market goes up over a long period of time, right? But can we mitigate going on the roller coaster ride? Now, my son loves roller coasters, and so do I. But I think the journey is a breath of fresh air, really, is what it comes down to for a lot of people. So it's a very different way of thinking in comparison to a lot of the very aggressive, and you talked about it, the industry has changed. Even in the short time, 6 or 7 years I've been like, what's a 60-40 split of a balance? Well, that doesn't work with today's market, right? And listening to you and listening to Denis and hearing how you guys are very open and adjusting to the market and making little tweaks along the way and always looking for the great next potential. And you guys do a lot of work on that side, which is something, being in a lot of meetings with organizations or institutions that are just, let's talk about this one big thing, and this is the thing, is flavor of the month or flavor of the quarter or whatever it is. So Jim, I know you were going to say some stuff likely about sequence returns and how it helps clients to think differently about their longer term objectives and their goals. So,
well, it's an area of risk that people are not talking about. Advisors are talking about it. Clients aren't aware of it. So when we point it out to them, and then we speak to them about why they want their portfolios managed the way they have them managed through Raintree Wealth Management, is really when you're approaching retirement. Again, to Jay's point, I remember 2008, and people were dealing with 50-60% losses. They had to delay retirement because their retirement assets were wiped out, and it took them about 5 or 6 years to break even from that. Had they been invested in a portfolio that was managed differently, we're not saying that they wouldn't have experienced losses. They would have experienced losses, but it wouldn't have been as deep. I don't believe as what a lot of people experience, specifically in the mutual fund world. I was offering mutual funds back in 2000.
Yeah.
So again, I saw the impact of that. So Jay, I know you're not a one-man show. You have a team behind you. So there's a lot of decisions that are made from a portfolio point of view as well. So can you maybe talk about the team and kind of the process of how you make the decision of allocating funds to certain managers and under certain asset classes?
Sure. So maybe I'll take a step back and first to just explain to everyone listening how we do investments for clients. So, typically when you as a client go to whether it be a bank or your financial advisor and they offer you some portfolio management solutions, typically what happens is that firm will be the firm that does essentially all the work. So they'll picking the stocks, they're picking the bonds and whatever throughout your portfolio. And most do a good job at that. What we've decided to do is do something a little bit different. So when we're allocating a portfolio on behalf of a client, we decided that we're not the subject matter experts. I always use this analogy of like, if you come to me and ask me, should I buy Coke, should I buy Pepsi, should I buy both or buy neither as a stock? I'm actually not the subject matter expert. I actually don't know the answer to that. So what we decided to do is we're going to go out and hire some of the best managers in the world who specialize in the various things. So whether that be the US stock market, whether it be emerging markets, whether it be private credit, hedge funds, we wanted to access some best managers and get some best practices into our portfolio. The other part of it is giving clients access to some of these managers. So the manager reviews are really highly sought after, in some cases managing trillions of dollars. they're not typically available to the average Canadian like us. So be able to have a client come in and be able to access some of these managers and have some of the best of breed managers in the world who are specialized is something exciting for us. So that's kind of a key differentiation of how we manage solutions. So when Jim talks about managers and allocations, when we build a portfolio for client, we then allocate to these managers around the world. In terms of our investment committee, as I mentioned, I am just one member of a investment committee that's led by our chief investment officer and our CEO, Peter Kincaid, who leads that. Along that, we have several managers, portfolio managers, and analysts on our team, Mike Freeman, Sean Wilson, Mac McKenzie, or from Edmonton is also on that team. And that team is responsible for the asset allocations for all of our portfolios. So we decide kind of the breakdown of how each client's portfolio should be relative to the risk of the market and the risk that client is seeking to achieve. And then our team kind of meets formally once a month. However, we're on constantly communicating and chatting. So our committee meets formally once a month, and at that committee meeting, we'll make more of a tweaking of the market, here and there where we see opportunities or taking some money off the table when we see we've got some good returns. And then on a quarterly basis, we'll do a much more kind of a forward-looking modeling to see what do we project, how do we see the market going, to give us a bit of a more of a glide path. We don't like to whipsaw clients back and forth. So if for example, we're adding a new position, we're not just going to bang, all of a sudden it's there. We'll kind of dip into it and buy into it over time. Think of dollar cost averaging for you as a client of buying into a fund or something. We do the same thing. So we're gonna, and the same way when we're selling out, we kind of drip it out and drip it in. So we're not whipping the portfolios around. So that's how we formally meet. But I always say that the markets give us new information every day, and if something there alerts us to that we need our immediate attention, we will convene and make some decisions accordingly. The pandemic is a great example where that required us to immediately decide to make some decisions. And we, very early on, that decision was to take a lot of risk off the table and go very conservative on that portfolio on a relative basis. And similarly in 2022, when, we saw the beginning of interest rate climbing, and you had that in a combination of kind of recessionary fears. You had markets kind of tanking off, and you had, markets building up 16, 17%. We were able to hold clients in much better because, we took a much more conservative approach and said, you know what, these are not the areas we want to be in these current markets. Took on a lot more cash, moved clients to more shorter term bonds, took on more hedge fund positions to help protect clients. And that's kind of how we operate. But we're always looking at new managers. One of the key opportunities that we have is by going through this process, you're getting, great decision making from investment talent around the world. That's always independent of each other. That's one of the things that I learned in my career working at firms where all the investment management is kind of in one room. You tend to sometimes have what we call groupthink. Somebody has a great idea, and then the other person looks over and goes, well, that's a great idea, and that worked for that portfolio manager. Maybe I'll sprinkle a little bit of that. And then all of a sudden you see it sprinkled across, and then you have the tech wreck. And so that's for us, having these managers who have different schools of thought. We literally have two managers who right now think, one manager thinks the sky's falling, and we have one manager saying, oh, growth all the way. Great. Actually, we want that divergent school of thought because we want to understand how they see the marketplace and how they see risk, and then we allocate accordingly to how we then see it as well. So that's kind of how we differentiate and how we offer more value for a client. I don't know if clients necessarily want me picking stocks or Peter picking stocks. We've got, we have one of our portfolio managers manages nearly $9 trillion. I guess what they could probably do better than I can is pick stocks in various markets than I can. So that's what we decide. And then what I think what's also important for clients probably want to hear is they're probably thinking, well, that probably sounds pretty expensive. No, actually, we for that, you're probably paying. I think Jimmy, you and I have talked about it, coming to Raintree Wealth Management, when it's all said and done, you're probably paying less than an average balance fund at a bank. And the difference being you're getting some of the best investment management talent in the world versus some bank, and I won't throw any shade on any of the investment management talent at the bank. I know a lot of them.
Good.
The sign of a great team is surrounding yourself with people much smarter than you,
Yeah,
right?
yeah,
So
absolutely. The scary part is I am the pretty face of the so yeah, absolutely. We want to surround ourselves around some great managers, and when we are struggling, not struggling, but are trying to solve for, we can call up those managers and say, our fixed income manager, and says, hey, how are you seeing the world? How are you seeing rates? Short end of the curve, long end of the curve. We can call our real estate manager and and understanding the implications. So for us, being able to leverage that expertise offers, I think, our solutions a better overall solution, because we're so much closer to those investment managers, but they're, again, independent and thinking on their own about the world, and we love that. And we'll continue to keep looking at new managers and new ways to diversify and new ways to add growth opportunities to the portfolios.
You're not on TikTok to get that information? Like a lot of
No,
people?
no, no, no. Yes, please. If I can give one advice, don't get your investment advice off TikTok. If I can,
Yeah.
if anybody can leave anything with that, yeah. No,
even if they're dancing,
even if they're,
Oh,
yeah, even if they're
don't get
dancing,
Ryan started. Please don't get Ryan
yeah.
started.
Yeah, no, but it goes back to Ryan, something you said of selling the returns. We never sell in returns. Of course, we're fully transparent in terms of returns, and if anybody wants to know, they can call us. But we want to make sure clients have a good plan, because
Yep.
the downside of selling a return is the markets don't go in one direction. And if something is giving you a double-digit return, that means it has the equal ability to give you double-digit negative return. And people fail to recognize that. So if something can give you a 25% return, it can give you a negative 25% return. And that's way more painful. So that's what we try to avoid, is that chasing the fad, or the new thing that's going to give me these great returns. We get it all the time. We get clients calling us and it's like, hey, have you guys heard of crypto? And I'm like, oh no. Yeah, we've heard of crypto. Yeah, it's something we'll look at, but I wouldn't bet the farm on it. And I think that's another thing that we talk about with our clients is scaling their investment decision. There's room for your portfolio to have crypto. There's room for your portfolio to have products that have plus 25% upside potential, but it shouldn't be your whole portfolio. So we like to use the concept of a core and explore. So core should be a well-diversified portfolio globally, accessing different asset classes. And then your explore, should be the parts where you want to go out and be able to find alternative sources of alpha growth in your portfolio. Yeah, do that. But just make sure you have somebody there to help you to make sure you're right sizing those. What generally tends to happen is people go put 20% of their portfolio in a core and then play with 80% in the marketplace and want to be their own broker. And that's where clients get it. If you look at the tech wreck is a great example. I always will go back to that. It wasn't the bad advice they got from advisors and their reps. It was their advice they were giving themselves. They were looking at the marketplace and they just saw the marketplace going up and they were doing it themselves. And that's the failure of sometimes of clients needing a portfolio manager to help them recognize, going, you know what, let me protect you against you a little bit, and do some of the stuff that's plain vanilla, or a little bit maybe not as sexy as crypto or hedge funds or all that stuff, but we need to make sure that clients are reasonable and rational about their investment decision. That's where we come in. We could be reasonable and rational and not be as emotional, because you guys know, right? People get very emotional about their money, and sometimes have outsized expectations of what their money can return or achieve with very little risk. And that's the part that we want to do, is make sure educate clients is, yeah, you can chase those returns, but there is a fair degree of risk of that with that.
Well, I think you're touching upon. Sorry, I was going to say you're touching upon something that education of people, right? And as we go through and coach our clients and help them understand more about the market, without beating into what Jim's potentially going to say too. But is there something that you see as like a great starting point for people looking to invest?
Yeah, it's a great question, right? You know, I felt this way for a very long time. The hardest part of investing is actually finding the dollar to invest. And so to me, a good investment plan should start with a good savings plan. Because uh, saving, finding the extra 25, $50 every paycheck or whatever that is, that's the secret. Start there, figure that part out. I would say 80% of the heavy lifting is finding that. If you can find the money to save reasonably, that is going to be your, and early. You know, I can't stress to the younger listeners, start early. You know, even if it's 20
Mhm.
bucks or $10, whatever the money, it will compound.
Yeah.
Time is of to your advantage. Just take advantage of that. So I usually tell clients is uh, don't the market can't guarantee you retirement. So you can't just turn $10 into 10 million and expect the market to do all that work for you. Um, first start with a good savings plan is what I usually, that's the, that's part A of an investment plan. Start with a good savings plan. Then the
Yeah.
investment plan is, I usually tell most people is find somebody who can give you good advice. Because it's been proven over time that clients who work with those who could provide them advice generally do better because again
Mm.
they can provide a much more holistic point of view of their portfolio. They can help them manage the emotionality of the markets we talked about. So for me it starts with the savings plan. Find somebody you can trust to give you advice about investing. Those
Mhm.
two will do almost all of the work. Then when it comes, and then the next part is then properly diversifying your portfolio. So take your long, medium, short-term liquidity needs, money needs, and then break that out in terms of, what level of risk can you afford. So, okay, this long-term money, I don't need it for 25 years. We can apply a certain amount of risk associated with that, or long-term growth prospects to it. The medium term, short term, and again, I think that's why a lot of clients struggle is because they don't have someone who can give them that advice to help them. Because I don't know, Jim, maybe Ryan, you probably see it. Clients sometimes think of all their money as one pile and don't kind of bifurcate it into like, okay, this is stuff I need to live off day to day. This is kind of my emergency fund. This is kind of, oh, I'm saving for a house, and this is my retirement.
Mhm.
And those all require a different level degree of distinction in terms of how we want to manage those pools of money. So
Yeah.
that I think is the good starting point. So save, get advice, diversify. It would be my kind of like 3 bullet points on a good savings plan. Picking the investments after the fact is completely the smallest part of it. It's just to me
Mhm.
those 3 points, and I don't think a lot of clients do those three things. One, they don't think they can get advice because they don't have a certain amount of savings, which is bupkis. I'm telling everyone here, you can get advice no matter how much money you've got. And
Mhm.
two is helping find those ways where you can improve your savings because nothing, you know, what's the saying? You can never outrun a bad diet. Well, you can't outperform no savings, right? Like you need to
True.
create the mechanism to put some money away. And I know that's hard for Canadians. Cost of living is going up, housing costs are going up, but that's to me is the secret sauce to get to having a good plan.
Mhm.
Now, Jay, I was working with Raintree Wealth Management before you joined,
Yeah,
and in my opinion, um, two very important personal changes were made. You being one of them. So you've definitely made some fantastic changes, but I have to give a shout out to Adidas
yeah,
because I got to tell you, um, I've been in customer service all my life. I've worked at call centers in the past as well. Every firm should offer, a high level of customer service, but man, she takes it to a whole different level.
that's
Um,
right.
so
Yeah,
I just want, just in terms of even Raintree Wealth Management, the biggest change that I've noticed too is just the level of service you provide to our clients, which as advisors who are recommending the portfolio manager, yes, we definitely have a strong portfolio solution. We want to have strong management and all those wonderful things, but we also require really good service, which is something that I've definitely noticed is different, you know, A plus in terms of the industry in my experience. So I want people to know that. And even with you, I've had clients say to me, I can't believe the president of the firm is willing to meet with me to talk to me about my money, right? So that's been a big one because you do offer to do that. I can't imagine clients calling one of the other big firms and asking to speak with the CEO, the president, to talk about their $300,000 account. It's just not going to happen. But you do take the time, so I just want people to know that it's something that we really appreciate.
Yeah, thank you. Appreciate it. That's something we worked on. Yes, a shout out to Adita Sayek, who runs our administration and is head of our operations. Um, it- Culturally, we wanted to, instill that the client was the most important. We had, when I joined, we had gone through a very tumultuous marketplace. We had the pandemic, and then the kind of the markets kind of whipsawing over the next few years. And as soon as I joined Raintree, the feedback I got, not from necessarily clients of Raintree, but broadly speaking, was they can't get a call with their portfolio manager to explain what is going on. Am I okay? Am I on the right path? And I've heard this none too often, where you're, again, you guys know these people in the industry too. My advisor calls me when the markets are great, and when the markets are not so much, they duck. And I didn't want to be that firm. Like didn't want, because that's uh, the scariest feeling in the world for a client. We live in this world. We live in the investment world. We see markets go up and down. We've kind of seen that before. So we don't probably take it as hard. But if a client who doesn't have this level of sophistication of the market, what's happening? And then all of a sudden they've got their life savings they've entrusted somebody with, and all of a sudden now they're not getting any feedback going, what's going on with my money? That must be the most terrifying thing to happen for somebody. So we never want to do that, and so the edict for our business has always been the client comes first. So whether it's me, our CIO, Peter, our portfolio analyst team, any of us have got some work. All of us drop our pens if a client asks for something. The client needs something. It's most important for us that our clients feel special, because they are. Like, I find it quite humbling when I meet with clients and they're like, oh, they're embarrassed, they're sheepish. They're like, oh, I only have this money.
Yeah.
And I'm like, no, you worked very hard of
Yeah.
your pile of money. I We need to treat it with the respect that it deserves, regardless of the number of zeros behind at the end of it. So that's for us has been very important. So we talk to clients who technically even have less than our minimums, and to our biggest clients, and I'm happy to meet with any and all of them because I want them to feel comfortable about what they're doing, and we want to be transparent about it. We don't want to duck. We absolutely do
Yeah.
not want to do that. We want to, and I find that just by us having better relationships with our clients, they have a much better tolerance of things. Some think markets don't happen, so we don't get those freaked out calls anymore. Like we don't get them at all because we're usually in front of clients saying, "Oh, this is what's happening. This is what's happening in your portfolio." So we've written, and my 2.5 years, I've never had a client going, "What's going on with my money? What's going on in my account?" We don't have it. So we're much more proactive with our clients, and knowing that they can just pick up the phone and call me, even being as the president of the firm, gives them a bit of assurance, saying, "Oh, okay, no one's like, I, I'm not going to get caught in this endless, chain mail, phone mail." Leaving voicemails, no one's returning my call. We don't do that. My team knows that we expect almost always, we expect to return our clients' calls within an hour at best, if we can, do our clients. And we want to make sure that they understand. And I think just that also works for our advisors. Jim, Brian, why would I make your life harder if you have clients who are asking questions? Obviously, you're going to come to me and say, hey, if I'm ducking that call, that's not going to make your life any easier. So we look at, what we do is we're part of a continuation of your service model. You're the quarterback of the kind of for the client, and we're just one of the players on the team. And so we want to make sure we're following what the quarterback's doing. So we want to keep up with that service engagement. And I find most of our advisors do an amazing job of servicing the clients. So it behooves us to do the same.
Mm.
Yeah, and again, Ryan and I work with so many firms, and there's always the talk of they're client focused, but you guys walk the walk. You know,
Yeah.
you've
Thank
proven
you.
it time after time. Ryan and I were actually in a meeting earlier today with another firm, and of course they asked me about, you know, doing business with them. And Ryan, what did I say to them? I said, you know, would love to, but your customer service has been horrendous for 5 years. I can't place business with you because I don't trust your customer service. I don't trust your back office, um, because they're just horrible. You know, so
Yeah, and
service is really important.
yeah, that was the lesson I learned when I joined. Um, obviously I come from a background of building products and strategy, but the feedback I heard was, Jay, your business is a little bit hard to work with. We need a little bit more from a client service perspective. We need a little bit more support from operations. And that's, where I really spent the first 6, 7 months, and, bringing the detail was part of that, of really changing that dimension of our business. Because I always say you can sell the greatest mousetrap, but if you have the worst sales process, no one's going to buy it. So we wanted to make sure that we
Yeah.
were, not only do we offer a solution for clients that makes sense, but do so in a fashion that advisors and clients are happy to work with us as well.
Yeah, and the whole thing about ducking the call, I mean, admittedly, I think I learned that lesson in 2008, you know, because markets were doing what they were doing, people were panicking, advisors weren't returning their client phone calls. And I remember specifically one night before going to bed, watching the news, and they announced that we're going to head into the next Great Depression. And my wife, you know, looked at me thinking, we're going to lose everything. I'm panicking. And I asked, why are you panicking? Well, because the news just said we're going to head to the next Great Depression. So then I kind of explained to her why we're probably not heading in that direction. And then the light bulb came on. I'm like, if my wife, who knows that I'm in the business, reacted that way to what the news had just said, what are my clients thinking? Right, to your point. And that's where we have been very proactive, and your team has been very proactive when we have dealt with some, you know, volatility in the marketplace. And I think that brings a lot of comfort to a lot of people. So once again, really appreciate that. It makes our job so much easier too.
Thank you.
Yeah.
Appreciate it. Like I said,
So
it's something we always want to focus on. Yeah.
yeah, and you do. So Jay, you've been here 2.5 years. What's kind of like your vision in the future for Raintree Wealth Management? What are you hoping to achieve? What do you want the firm to look like in the
Sure, that's
next
a
few
great
years?
question. So we've made, I would say some pretty substantial changes of the business over the last couple of years. We talked about the back office and the administration. We made some fairly significant changes to our investment solutions. When I joined, we had a very similar model, but more focused on just a traditional equity bond exposure. We had, 4 managers in our portfolios when I first started. We're up to 16 now, wanting to have that greater diversification. I think, going forward, I think we're going to lean in more into that pension style. Right now we're doing a lot of work on potentially incorporating some new strategies. As I mentioned earlier, Raintree Wealth Management was born out of an exempt market dealer called Raintree Financial Services, and one of their expertise is offering these unique investment solutions to clients on them there. Could we potentially incorporate some of those alternative investments into our solutions? So we're looking at that. We are looking at potentially expanding our roster of solutions to our clients. We have done a very great job historically of protecting clients on the downside, but there are clients who want to take on more of a growthier profile. So we want to be able to offer solutions for those clients who really want to take advantage of growth, or who really want to lean into the alternative. So we have some plans afoot to offer new solutions, hopefully in the fall, that will attract kind of a wider spectrum of clients who are both, so it's all the way from retirees who are now withdrawing from their savings, all the way from the earliest savers, in their 20s. We want to be able to service kind of all those clients and in between. So that's, for us, is, I think, are going to be our main focus. As a business, our next focus is to continue to grow. As we grow as a business, we're able to offer more solutions, more technology. That's another thing that we're looking on investing with. I know Jim, Ryan, you guys are at the top of your game, and I learned from you guys in terms of incorporating AI and technology. That's something that we are looking at. We've started to incorporate it here and there, but we want to do that on a more wide scale basis. So that's something that we are looking at, is how do we incorporate more of technology into our clients to for one thing, to just make it easier to do business with us, but also to lean back to our making sure, can we inform our clients? So can we do better targeting of information to our clients? So right now, when we send information out to clients, we kind of send it en masse. And it would be great to say, oh, let's only send it to those clients that have specific aspects of their portfolio, or only are invested in a certain marketplace. So do a little bit more intelligence about, giving commentary to those clients that it's most relevant to. So I think those are the areas we're most focused on. The next, is having more portfolio managers. We have a great roster of portfolio managers on our team. I'm always looking out for more talent, as well as Peter, to add more investment talent to our team. And then, of course, lastly, is to continue to look at new managers and new evolutions. I think, not to tell tales, but, we have 16 managers, and I think, I won't put words in Mike's mouth, but we're probably looking at 15 to 20 new other additional strategies that are at some form of, looking at it. So we're going to constantly look at new opportunities to invest for the market, for our clients. I think staying ahead of that curve is something that will be at the forefront for us. So we're not going to be a follower. We're going to be a leader in that area, I think, leading into the alternatives, having more of that positioning into our clients' portfolio, giving them more of that pension style investing that really is limited in terms of offerings in Canada. Most clients still generally have a 60-40 portfolio or some version of that. We want to give clients what did I use my term, a better mousetrap. So we want to give clients a better mousetrap, we think, to help solve for risk return. And so our job is to continue to look at new solutions, new asset classes that we can add to continue to help diversify, but offer or offer growth to solutions to the clients. So that, in a nutshell, that's our big goal. We've got fairly robust growth trajectories to growing the business as well. So I'm really excited about the last couple of years, and if hopefully that'll be a good footing for us to continue to evolve as a business, because you guys know, this business evolves over time. The clients' needs change, clients get more sophisticated, products get more sophisticated. So it's for us to keep up that path and continue to innovate for our clients.
Thanks for that. So we are approaching the hour mark. Ryan, do you have any final questions for Jay? Any comments?
No, I think a big part of it is the engagement that we're seeing from Raintree and from you, Jay, and what you guys are expecting, and really trying to change how people think about, investing, and offering something same but different in a way that is enlightening for people to not be on the regular track that they're used to, just like TVH Group, offering like a holistic experience for clients from start to finish, really focused on the customer experience. And I think a lot of businesses can learn a lot from that, and just making sure they understand, what does customer service mean? And I think that's one of the biggest takeaways for me, working alongside you and the team, and Jim and the TVH Group and financials. So, yeah.
Well, thank you for that. Like I said, I give a lot of credit to my team who puts the client at the top of our priority every day, both from an investment management and as well from a client services. And so we pride ourselves on that, and we hopefully will continue to be able to offer the same level of service as we continue to grow.
Now, Jay, is Raintree Wealth Management available across Canada, or only specific areas of the country?
Yeah, so great question, Jim. We just in the process of getting registered. So right now we are registered in all provinces, Ontario West, but we are very shortly will be registered I think across most of the provinces, and the territories will probably come later, but we are currently working on getting us registered in the Maritimes right now. And then Quebec and some of the other territories will follow, but the Maritimes we are working on it. So then we will be able to essentially offer our services for the most part coast to coast. And yeah, that's part of our expansion plan as well.
Awesome. That's great.
Okay.
So what I would say is for anyone who's watching there or listening as an investor, and if you'd like to find out a little bit more about the Raintree Wealth Management offering, you can actually go to tvhwealth.ca and do some research there. There's also info@tvhwealth.ca. You can speak with portfolio manager Denis Bizon, who is one of the portfolio managers through Raintree Wealth Management. And Jay, if someone is looking to join Raintree Wealth Management as a portfolio manager, how can they reach out to you?
Sure, they can either reach out to me directly. I can be reached at J, just the letter, Bhutani at raintreewm.com. So if you are a portfolio manager and are interested about what we do, or if you're a client and interested in what we're doing, yeah, by all means, reach out to me. Again, Jay Bhutani at raintreewm.com.
Great. So Jay, I want to thank you for your time.
Thank you, guys.
We could probably have gone another hour with this, but really enjoy you joining us today. Ryan,
Thank
you
you.
as well. And for everyone out there, like, share, subscribe, do all those wonderful social media stuff for us. And finally, if you want some more information about Ryan and I, tvhfinancial.ca, and you can reach out to us there. So thank you, everyone. Take care until the next time.
Thank you.
Welcome to Money Mindset and Mastery with Jim and Ryan. Make your path easy, from finance tips to life's great journey. Tune in, stay sharp, let's make your goals worthy. Money Mindset and Mastery, together we'll unlock your destiny. With insight, stories, and expert advice, we'll guide you to success. Just listen twice. Empower your mind, master your fate. Jim and Ryan here to elevate. Through every struggle, every triumph, right, we're here to shed some light. Just listen twice. Let's get it right. Money Mindset.